everybody? I had it on mute there for a second. What's up, everybody? Ted here with Bodies and Wicks. And coming out with you with some smart money agenda. Today we're going to be talking about synthetics and basically how to profit off of stop hunts, or what to look for to catch a stop hunt. And again, this is all coming from smart money theory. So if you don't know what smart money theory is, let me give you the rundown again. If you watch my other videos, you already know. Basically, we don't trade off trend lines. Trend lines are basically only used to look for liquidity. We don't use geometrical shapes to trade off of, like triangles or bull flags, bear flags, pennants, anything like that. Harmonics off the grounds, no such thing as harmonics, no such thing as channels. All of that is just kind of there to, or at least taught, to make you trade in a way that you think you're trading like the pros are, but in reality, the people that have the real money, they know about smart money. They know that everything is driven by an algorithm. They know where to push the money to take you out and take your money, basically. And that is all driven by the algorithm. So you have to know what's in the algorithm, or how to understand the algorithm to trade like the actual people who have the huge hedge funds, the people that are like Deutsche Bank or Chase Bank, who probably not in the crypto market yet, because this was all developed in the Forex market, but it is definitely prevalent in the crypto market. And it's easily seen, that's for sure. Everything that I studied in the Forex market as far as smart money is concerned has showed up in the crypto market. So price basically looks for two things in this algorithm. It looks for liquidity, right? To go for areas that are going to trigger either where people have buy limits, sell limits, buy stops, sell stops, those areas that would actually trigger money to be released into the market. It triggers those areas, and then it tries to go against what you would normally try to play. So let's say there's a double bottom, right? And you think once it hits that bottom again, that's resistance. So you put a buy limit near that bottom, short stop loss, because it's already been a double bottom. It's probably not going to get any lower. Smart money is probably going to get close to that, pull up to try to make you think that it's going to go the right way, and then shoot straight down and then take you out and take out your money. This is primarily for margin trading, things like that. But I also use it for building portfolio by finding the best way to down cost average. That way I'm not buying at the top and selling at the bottom. I'm actually finding where to buy at the right spot. So that being said, let's go ahead and take a look at synthetics. There we go. And I just want to take a look at the monthly. This is the monthly on, it says calculated by TradingView by Binance. It goes back a lot longer, but I just wanted to show you what is, well, basically the premise for today, what to learn and how we're going to put it in practice. So, but right now, this is primarily my favorite way to trade, is this formation right here. And you'll see it a lot, right? So you have these two down candles before you have three basically engulfing candles, and then goes to the top, accumulates, and then it comes back down. And where does it stop at? It stops at the order blocks. So the order blocks are going to be a huge component into finding and taking advantage of these stop losses, or not stop losses, but stop hunts. So what they are is basically, in any bearish candles, before you see a bullish action, or a bullish takeover of those candles. The tops of these candles will be considered your order blocks, considering they're both in a row. The wick doesn't go below the body or anything like that. Both of these candles could be considered one, and so that would make this a full order block. That's the word I was looking for. And it happens right at the 79%, which is where you're going to see a lot of action. I always tell my people if you're going to put a Fibonacci, a lot of people, to be honest, I don't even know what the regular Fibonacci looks like anymore, because I'm so used to the smart money Fibonacci, which is, of course, you have this, the 61.8%. I'll move it up to 62 just so I can have some leeway in case there's a spread or something from the broker. And the next one down would be the 70.5, and then you got the 79, which is where this one is, and then the 88.6. Rarely does it get down to the 88.6, but man, if it does get down to the 88.6, you usually see a complete flying of the other way. So as you can see right now, we are just now getting where we got into the order block of the monthly, I should say. This is the monthly. We're going back to September here. This is the last time we hit this price as a high, basically. And then it dipped and then came up through, comes back down, and now we're going back up from here. Hopefully we're going back up from here. We'll get into that at the end of the video. We'll try to analyze what's happening in the last couple days, but before that, we're going to show you how to take advantage of the stop hunts. So I'm going to move it over to this one here, and as you can see, I know there's a lot of lines. I'll try to explain them. Okay, so the green dotted lines are where you're going to find your stop hunts. Usually what I'll do is I'll do an 8-hour time frame to try to find them. Right, so you have a stop hunt down here. You got one here. Forgot what I did with this one, but I think this was more of an accumulation once you look at it at the 1 hour. Same with this one. So all these green lines are basically the stop hunts. So, and the yellow lines are basically where you would set your limit order to catch those. And how you catch those is going to be in the 1 hour, right? And I've also drawn out some areas to where the order blocks, because that's where these yellow lines are. These yellow lines are basically are at 1 hour order blocks, right? So I don't know if did I just move something? Yeah, I did. All right, so now that we've seen where the stop hunts are, we can go to the 1 hour, and let's try to go from top down to see how we catch these. All right. So there's our first one here. As you can see, this is when we made the entire high as it was coming down. First, what you got to look at, well, here's kind of a stop hunt too. And what I did is you look at this one, which is kind of a, like a mini stop hunt, but what made that a stop hunt, I guess you could say, or what caused it to spike down and then come back up would be your order block. So let me get back off of that and try to get in closer so we can see. I'm going to be scrolling around a lot, so right here, all the way over to here. All right, so there's your order block here. And as you can see, just like the monthly, the last down candle before the ups take over it, right? It comes back down, pops off of it, hits it, boom, then it goes through it. Now, whenever you do these, your stop loss, you want to put it just at or just below the last down candle. If it goes through it, then unfortunately, you're going to lose out. But rarely does this happen, and as we'll find out in this video. So you can see the order block uses this, takes off, goes on, and then you have this order block here, which is what kind of propelled this area. So now comes the stop hunt here that we found in the 8 hour. So what you want to do is you want to go back to where that area was. And even here, there was 3 lows, right? So 3 lows here, which means, and they were caused basically by this order block. So this order block here hit it, hit it, hit it. And so these aren't technically stop hunts. This is just part of the accumulation that happened. The order block prevented it from moving up. It didn't get below the order block. So the thing that you look for is underneath these, and underneath, well, this, you wouldn't be able to know it was underneath the stop hunt, but you look for something like this, and then you find the next order block that's in place, right? So order blocks here, right? Probably want to put your stop loss just below the low of here, and then next thing you know, let's go back over, boom, you'll catch the stop hunt. Stop hunt comes back, hits that order block, and then pops on right back up. As you can see, even though this wasn't a stop hunt, this was another area that an order block formed. You could have easily put a buy limit here and then put a stop loss just right around here or just below it, came back into that area, and then boom, took off. So there's one stop hunt that we caught. So next one, I have 2 yellow lines and there's not a green line. trying to figure. Oh, I think I was trying to make an example that you could use both. Okay, so now here again we have an area, not a stop hunt, but just an area of accumulation. This would be an area of liquidity, an area that people would think that would be an area of support. If it comes back down to this area again, they would probably start buying, or they would have sell stops, thinking they would catch a breakout to the bottom. It might, they would think it might come back, touch it, as a just a retest, and then move on down. Let me get myself off the screen here so you guys can actually see what's going on, and maybe turn on some music, who knows. All right, there we go. So what do? You go back to the area that is below that, and you look for the order block that is within that area. Now this is actually a stop hunt in itself, and if there is an order block within that stop hunt, make sure you mark that out, because in the future it'll probably come back down to it. Same with here. So it's hard going backwards on these in time. So if we were going up this way, right, and you were coming down here, you would have this order block here, this order block here, right? So and then you have kind of these areas of liquidity. You could set your stop limits or your buy limits right at these areas of where the buy limits are, or not the buy limits, the order blocks are, and sure enough, you'll probably catch a stop hunt, because it's going to try to get below this liquidity and catch that, and then move on up. And since this one has an actual order block within the stop hunt, mark that out, and then in the future, what you're going to get once we get to it, since it's just below this area of liquidity as well, as this is going to shoot through and get, you would catch it here and here, and there. Let's see here. Yeah, I got this in the way. Yeah, and here. So there's 3 possible areas to where you could catch this stop hunt, all just from order blocks, just from being just below the previous stop hunt order block, if that makes any sense. So there's a stop hunt that it was probably caused by an order block. Look for the order block below that one, and then that's what's going to catch it. So see this one, as it came down, we caught it with this one. Then you look for the next order block that's below it, right? So because you're not going to catch that one again, of course, but in the future, this one you could catch the next stop hunt, maybe months in the future, but you could just set your limit, leave it there, and then boom, there's your limit order, the yellow line, there's your limit order, boom, catches a stop hunt. And as you can see, this one would have been a huge win. I think it was something like, I'm gonna actually measure it out as a long. So if you were to put your long right at the start at that bullish order block, and then I'm not really sure, wherever you wanted to put your stop loss, just below, but somewhere around there. Because this one came all the way up here. You know, it was about 11 to 1. If you're just looking for something like a 3 to 1, you definitely would have caught it easily. Because, well, let me get this off the magnetic field here. Right there is your 3 to 1, right? You want to up it to 5 to 1, there it is. Actually, if you would have held on to it, I mean, you could have took profits here, moved your stop loss up a little bit, above profit anyway, let it do its thing, and, you know, as you can see, it comes up and actually, well, was only talking about bullish order blocks, but there is a bearish order block right here, you know, and you could have took profit there, making that one a almost 10 to 1, and so on and so forth, until, you know, and you move your stop loss up again until eventually, you know, you get knocked out, and you get knocked out in the positive, and more than likely a good portion in the positive, is if you're taking profits as you go along and you keep moving your stop loss up, you know, there's no reason why you couldn't collect quite a bit of money on this area here. Next one, I think I have marked, so we've gotten that one. And this one, oh yeah, that was the other one I talked about. So now we got all these stop loss or stop hunts collected. Get rid of them. And look, you're only risking, you know, 5% on this one, to where you actually would have put your limit order start to where it actually stopped. So you'd have only been risking 4%, and you would have gained however much I just explained. So there's that. I mean, it's just a huge advantage looking for the previous order block after, you know, a stop hunt has been created. So here's a stop hunt I was talking about, and how you would find this one actually would be through a monthly fair value gap. So any kind of fair value gap is going to be basically something like almost like a tractor, but it also repels at the same time. It's like a magnet. So if we would go here, I had this purple one here for a reason. Let me explain this one first. Okay, so this purple one would have been almost impossible to catch, even though it's a small little stop hunt, and you can see it was just above the area of liquidity that this one was actually looking for. So this one would have been almost impossible to catch, but you could have, if you wanted to put, you know, random you know, buy limits at, you know, just kind of random order blocks here, because that's what this is. This is just a random order block, and it only got touched once or a couple times, as you can see. This area right here was trying to come down into it, but it wasn't allowing it to, so it repelled it away, and when it came back to it, it did eventually, you know, hit it, and repelled off. So that would have been a tough one to catch, but you know, these are how you know, or these are why your order blocks are so important, because they will catch these things, even if it's on a random note. You know, I personally wouldn't have done this because it was a lot higher in the market. It was right at about the 50% level. I try to do mine anything below the 61%, and that's why I drew a fib on this, was to try to catch most of these below the 62% level, because that's where the smart money is going to be looking to catch everything, because that's going to be the discounted price, right? That's not going to be, you know, if you're buying at 50%, yeah, 50% still a good portion off, but they're gonna think about buying a pair of pants. Would you rather pay 50% off, or would you rather pay, you know, 70.5% off? More than likely you'd rather pay 70.5% off, and that's why I look towards down here rather than versus up here, and also not in an area that just came out of a consolidation. So that's why I wanted to put that there and explain that one. So, but you know, it still could have happened. You know, if you're a risky person and you see something like that, go for it. You know, I am not a financial advisor, by the way. I'm just telling you from my experience. If I was a risky person, that's something I possibly would do. This one that I'm talking about, this fair value gap, now this came from the monthly, by the way. I believe, let me double check. I think I only have one or two more. Or maybe it was okay, so it's right here. So it may have been the weekly. It's a little bit more than the weekly because there's a bit of a big fair value gap on that. So I bet it was the daily. And I just moved that on accident. Yeah, it was. Okay, so, well, still the daily is a lot higher than that. Why did it get so small? Either way, for a fair value gap is going to go from it's going to be a concession of 3 different candles. Boom, there we go. Didn't need to move that. Don't need a replay. Hello. But what it is, from the top of this candle to the bottom of this candle, there's a little bit of a void in there, and this came right through it and stopped it and went the other way. That's another way you can catch these kind of stop hunts, is these fair value gaps. You know, you can enter in at the top, and at the bottom would be your stop loss, and if it goes through it, then it goes through it. But I don't think this one actually went all the way through. It didn't. So you would have actually caught this one and went on your way back up. Could have left it on there, caught this one as well, went all the way back up, and then that's how we would have caught this one as well. But this one on the hourly, you could have caught it at a better spot because there were, I think, within the fair value gap, there was an order block. So let's go back here. So as you can see, that spike down. What are you going to look for? You're going to look for the order block that's just below that spike. There, right there, is that order block. So that's what I'm talking about. So if you see this, there's going to be liquidity below this. So look for the order block that's just below that liquidity, because there's going to be something, there's going to basically be a stop loss that's going to come for that liquidity. And it's going to come, it's going to strike quick before it pops back up. So now that we established where that order block is, and we get closer to here, we can see, boom, we would have caught it at a better place than if we would have tried to catch it at the beginning of the order block. And as you can see, you would have only risked 3%, 3.642%, but as soon as it hit, boom, it took off the other way, and within a matter of a couple hours, you would have, let's see how much, you would have went from 932 to, I mean, as high as it got was about $15. So that's quite a bit of an increase if you'd have held on to that. But if you were just looking for something quick to scalp, you could have got a couple dollars out of it. It just depends on how you wanted to play it. You could have scaled off depending how much that you had. You could have took 50% off, like once you got to $12, and then another 10% off once you got to 13, and then another 10% off when you got to 14, and then let the rest run as you're moving your stop loss up along the way. So that's how you could have caught that one. Now, and this is what I'm saying by, if there is a stop, or if there is a stop hunt and there isn't like a order block within the stop hunt itself, don't go searching at a lower time frame for a stop hunt. Because what I did is I went down to the 15-minute of this. Well, now that we know we've got this one covered, I'm going to remove that. And let's say we wanted to try to catch something, from this stop hunt, because others have, right? So here's your order block. Got hit once, boom, got taken off. I mean, and of course you already would have been in this way down here from using the other practice. So now that it's come back down, oops, didn't mean to move that. Here you go. You would have entered here, it would have came down here, and you wouldn't have got much out of it. You would have got something out of it, but you wouldn't have got much out of it. So that's why I say don't even worry about trying to look into something that doesn't have an order block within the hour of a stop hunt. So only use the hour, because if you're looking in 15 minutes, you're going to get caught up in something else. Interestingly enough, these two have the same about the same stop lows of the stop hunt. You probably could have left another limit order there, if you wanted to, and caught another one, and would have came up here, and you know, again, scaling off profit as you went along, trailing your stop loss, you would have won on that one too. So and that's that one. I have explained that one, and now this is the current one. So this is the current one right here, and let's here, go all the way back. You can see there's a yellow line already above it. Why? Because there was stop hunts above it. So what do we look for? We look for the order block that, where'd it go? Oh, here. Well, I guess it doesn't go back that far on the hour. So how did I find it then? I must have found it on the, well, I'm on the 15-minute, that's why. Not the 1 minute, 1 hour. All right, there we go. So, boom, there it is. So, last stop hunt here, or here, actually, whichever one it was that we discussed. I think it was this one, or this one. What are you looking for? The next bullish order block. Now we go back into this area here. See, these aren't really, I mean, this is just a lot of consolidation. But if you look to the bottom before it all goes up, right, the last down candle before going up, you set the limit there, and of course we've already seen where it goes. So yeah, because here, I mean, this was just a liquidity run, and then just a lot of accumulation. There was probably some distribution right through here, goes up and then comes down, and then it's the last candle before the blast off. So the last down candle before the blast off, that would be your hint. And also it's just below another kind of a 1 hour stop hunt. So and you can see that was created by the order block here. So order block here to there, boom, takes off. Look for the next order block down. Here it is. And then keep that as your limit, your buy limit anyway. And then next thing you know, boom, you're catching the, I don't even know if this was a stop hunt to be, well, I think on the 8 hour it did look like a stop hunt, but comes down, hits it, goes all the way back up, but we're not breaking market structure. So again, scale off profit when you can, move up, you know, your stop loss whenever you can, whenever you feel comfortable. I would say, you know, if you see it start to pull back, maybe scale off some profit there. If it doesn't hit your stop loss, which should be below the area where you had it, leave it there, because those order blocks again will probably come back to. It'll hit it, move up. You can see it hit here. You can you know, see it. Well, actually what's happening is these are actually getting rejected by bearish order blocks. So here's bearish order block here. Didn't want to go this too deep into it, but I guess I'll have to show you. So you got a bearish order block here that pushes it down. So as soon as it hits it, I would have taken some profit, wait for it to see if it's going to get below the entry, or below the stop loss. More than likely it shouldn't. So this one doesn't, hits it again, moves on up. Now what we have another bearish order block. I need to magnet on once. Another bearish order block, hits it, take some profit as soon as you can. Looks like it drops back down and then hits another bullish order block. And then moves on up. And then this one getting hit by this bearish order block here. And so now it's moving downwards. All right, so what's causing it to go down, I wish I knew, but it looks like there's a bearish order block here. Comes up, hits it, comes up, hits it. So, that's completely separate from the teachings of trying to catch the stop hunts. But right now, we're trying to figure out what Synthetics is doing currently and to see what it's going to do next. All right, so, but hopefully you caught the stop hunt here as it moves up. Again, always watch the left side of the chart, especially once you get in closer to 1 hour, 15-minute, things like that, to try to catch these things, these order blocks, because that can, reject them just as they rejected, the stop hunts going the opposite way. Stop hunt comes down, hits an order block, goes back up. All right, same thing as if it's going down. If there's order blocks that are going the opposite direction, it'll come back up and then press them down instead of going back up. So it looks like it's came down to this same area. So now we have two lows. So what that would tell me is that we have it's at least creating an area of liquidity. So it's creating a fake area of support. So now everybody's going to be thinking that this is a support level. Don't be tricked. This could come up here. I'm not for sure if that is technically considered an order block. Yeah, I guess it could be. This green candle here. These are for sure. So watch and see if we can get above this area, because unfortunately right here through Synthetics, there's no equal highs except for maybe this one here. So there might be some liquidity above here. So it could aim for that, and hopefully it does. Hopefully we see it go up, aim for this, and then go higher. There's no equal highs here. Kind of some equal highs here. But there's nothing I would and there's no runs on liquidity up, you know, like there was with the stop hunts going down. So especially recently, you know, within the last couple days or within the last week. So I would watch to see if this is going to come up, maybe hit somewhere in this area in the maybe the 860 area to the 950 area. Oh, that just happened. Yeah, 850 area, 960 area, to see what kind of reaction it's gonna have, especially now that I see the fair value gap here. Let me go to, well, that's even the 1 hour, so there's multiple fair value gaps in here. And this one rejected it here, so I would mark this as another fair value gap. Get the marker on here. Ooh. Get a triangle, or not triangle, rectangle, that's the word. Going, move it across, and see if it can get up to that level. Hopefully these don't pose a threat into pushing it down. Let's hope it can get up to this level, to the fair value gap level, and then push up and out. Otherwise, we might get some bullish order blocks in here. This is definitely one here. This bullish, this area, these two candles consecutive, the bottom of this would be a bullish, sorry, not bullish, but a bearish order block. So if we put that on here, extend it out in the future, we'll have to see if it gets up to there and then comes down. Currently, it is in a bearish order block. As you can see, the bullish candle here gets overtaken by these two bearish candles, so it may not even get above this green candle here and continue on downward. That's what I'm thinking may happen, because it is a bearish order block. It looks like the momentum is definitely not in is bearish. The momentum is definitely not bullish. So we may see this continue to go down, maybe until it clears liquidity. I would have to see what's happening on the complete other side of the chart to see if there's any hope for it to come back up. And I would actually do that on a 4-hour level rather than a 1-hour level, because your higher time frames are going to trump your lower time frames. Just below that, this is the current low right here, this green line right here. Here I would say it's kind of a funky area, but there are two areas that there are order blocks, or positive order blocks, bullish order blocks, whatever you want to call them. You could look at this. You could look at this, or you could look at this. All three of these could do the same thing, considering this candle right here already came down, touched this bullish order block. We may have luck on this one. If we don't have luck on this one, that's at 762 or 7692. We may have luck here at 733 before hopefully turning the other way and start getting some bullishness out of synthetics. So or it looks like it may have actually pushed up and out. No, I doubt it. Doesn't look like it. Let me go back to the hour and see. Nope, it didn't get above that green candle, but it looks like it's trying to. So, hey, who knows? We might be on a bullish track here. So, anyways, that's all I got for you in this. Wow, this video is 50 minutes. I thought it was going to be more like 20 minutes. Anyways, that's all I got for you today. If you enjoyed the video and you think you learned something, please hit that like button, subscribe to my content, hit that notification bell. I'll be doing more videos like this in the future. I've done quite a bit of technical analysis content on various crypto currencies, as well as I've done some on gold. I did one on gold and Euro USD the other day. I haven't done the indices. If you want to see SPX or NASDAQ or something like that, I can do those too. All of the smart money theory, they all come from the same place. They're all basically the same, so they can be applied on any kind of chart whatsoever. It can be commodities, it can be soybeans, corn, meat, lumber, those kind of things. These kind of, algorithmic theories can be applied to everything that I'm talking about here, and that's why you're seeing it move in these kind of ways, because this is the algorithm. It remembers the algorithm, and the people that have their money involved in these know the algorithm. They know when to put their money in, they know when to take their money out, because they know the algorithm so well. So I'm not saying I'm the best at knowing the algorithm, but at least I can try to teach you something to help you get ahead. That way you're not trying to do something from a retail perspective and end up losing money by trying to trade off a trend line, and then all of a sudden it goes the opposite way because it knows that there's liquidity on the opposite side of that trend line, and it's gonna go that way and then take you out. So anyways, I hope I've done enough job for you guys. If you can, again, hit that like button, hit that subscribe button. It would mean a whole lot to me. You can also join my Patreon, just $3 a month, just because I have a lot of subscription services, just things to help me going with this podcast. Anything would help me out. Everything is in the description below. As far as signing up for cryptocurrency exchanges, all my referrals are below. I love using Gate. That's my favorite because it has almost every single coin out there, and it also has a cool referral program too. You can basically you can put it to where you can get 10% of the referral fees and the person you refer gets 30%, or you both split it 20-20. And the referral fees are the trading fees basically. Or you can put it to where you could be a little bit more greedier and you can get 30% and they can get 10%. I put mine 20-20, so that way we both get half. To me, it's a great trading system. It uses, or I'll click on it real quick. It uses TradingView as its trading platform. It also uses grid trading, so you can set a high and a low. It'll buy at the low, sell at the high. I'm putting minimal amounts in here for Pirate, for Mina, for Ethereum, for VeChain, and if we go to, let me see here, spot. I'm trying to find spot trading. You can go to Spot Professional. You can where is futures? It has futures in here too. ETH2O mining has the whole listing about everything that's out. The coin list. I mean, here you go. Here it has quantitative trading. Yeah, I'm not seeing the futures. Maybe it's in spot trading, but if you go to standard spot trading, you know, it'll bring up this. You'll have your token. Why am I still on subscribe stuff? Jeez, let me get myself off the the page for now, or switch to the other one. There we go. And so yeah, as you can see, it's showing Bitcoin here. 5-minute view, you can switch to the 30, you can go to the 4-hour, the 8-hour, you can go to the week. And of course it has, like I said, almost every single coin you could ever think of. So so check it out if you want. I always push Gate just because I really like it. And you can do grid trading really simply. Just click grid trading, click fill in the form on the right. It'll give you the upper limit, the lower limit, where it's going to buy, it's going to sell. Just make sure you have enough USDT in your account, which I do not. And then just to create AI strategy, and it'll trade for you. So it's that simple. So anyways, that's me. I'm gonna go ahead and get off here. Hope you have a great Friday. I may be back with another video. Until then, just keep your pants on, okay?